Hi, Ivan. Welcome. Thank you for joining the Opportunity Summit today. I'm going to briefly introduce you to the audience, and then I'll leave you to it. So, pasando a nuestro segundo invitado de hoy, quiero presentarles a Iván López. Iván supervisa todos los programas de aceleración de Techstars, Americas West y APAC. Tiene más de 25 años de experiencia en liderazgo ejecutivo global en desarrollo empresarial, marketing y tecnología. Nos encanta tenerlo hoy aquí porque Techstars es uno de los referentes más importantes en términos de aceleración y construcción de ecosistemas de emprendimiento tecnológico a nivel global. Iván hoy compartirá con nosotros las tendencias en emprendimiento que se dibujan en un mundo post-COVID. Welcome, Ivan. The floor is yours.
Thank you, Carmen, and thank you, everyone. My apologies, although my namesake would indicate that I should clearly speak Spanish. Unfortunately, my Spanish is just so out of practice that it would be a disaster for all of you to listen to me. And my horrible Madrid accent makes it all the worse. I'm going to go and start sharing my screen. Let's see. Make sure that we are. So you should have my presentation up now. Can I get a thumbs up from Carmen if we're good? Excellent, thank you. So again, thanks for the opportunity to be here today and participate. It's always a pleasure. Unfortunately, unable to travel, so I jokingly say to my family in the morning, they say, "What are you going to do today?" I said, "Oh, this morning I'm going to South America," which excites my children. And then they will probably pop in a few minutes and say, "Where are you going? You're not there yet." I would like to talk a little bit about COVID trends and opportunities, things that we've seen, and dive in a little bit to the data. I'm also happy to answer questions in the chat after I get through the presentation, but diving in a little bit of the background on Techstars, and I'll try to spend the least amount of time on this, but we were founded in 2006 and we had three very simple ideas. Entrepreneurs create the future, and collaboration drives innovation, and in particular, important to this forum, that opportunity is not everywhere, but innovation is. And so providing through our accelerator programs around the world, the opportunity for entrepreneurs to learn from experts, from mentors, and take their ideas to market is the core of our values, and they have not deviated in any way. Today, from that humble beginnings in Boulder, Colorado, some 14 years ago, we operate 46 accelerators worldwide and have community events in 147 countries around the world. I personally oversee 14 of these programs in America's West. That ranges from Texas through Colorado, California, Washington, and then over to Asia in Australia, Singapore, and Korea. I've also been pretty deeply involved in our activities in trying to develop opportunities in South America. Area of passion for me is really being able to plant our flag and support entrepreneurs in our markets that would not necessarily seem normal to the regular entrepreneurial or investment world. And this is just more of the timeline as to where we've started and where we've come from. Again, we really grew this program out of one idea. Our founders, Brad Feld, David Cohen, David Brown, and Jared Polis, who's currently the governor of Colorado, felt that if you helped entrepreneurs by providing mentorship, by providing guidance, connections to networks, so that they don't make the same mistakes that other entrepreneurs have made, and continually creating a learning cycle of that, that ultimately ecosystems would thrive, that entrepreneurs would be more successful. And as we look to the far right, in fact, I believe that's exactly what we're doing today. We have of over 2,300 companies that have gone through Techstars programs to date. Over 1,700 are active. Several hundred have exited successfully. And in our portfolio, we have 11 unicorns that have come through Techstars. Most people assume we have one or two. We have 11, And of those 11, 8 of them went through Techstars programs. The other 3 were Techstars investments that we made early on. And at this stage, rate, we have over $27.8 billion market cap from our portfolios. Notwithstanding that, we're adding 500 companies a year across all of our different verticals worldwide, which makes us, by Crunchbase's assessment, makes us the largest early stage venture investor in the world. And that sort of equates to a few different things: 15,000 active investors in our network, 8,200 mentors, 5,600 founders, and over 1,500 community events worldwide. Community events is where someone comes with an idea that wants to take that to market and has the opportunity to test that idea with others. Just the numbers sort of presented in a different way, but essentially we are making 5% of all early stage investing in the US as an additional data point. And as mentioned, not only our portfolio companies that have been highly successful, but also our corporate innovators and corporate partners. And that's where entrepreneurs have the opportunity to collaborate with the likes of Amazon, Stanley Black & Decker, Western Union, Tennis Australia, and test their ideas in true markets with market leaders. And that supports not only innovation with the market leaders, but also supports entrepreneurs being able to establish their theories and put them into practice. Sort of in summary, and this leads right into what we're about to talk about. Our expertise comes from 14 years of tracking this code. And we don't think we're done by any means. We still have a lot to learn. We learn every class cycle from every entrepreneur that touches us. We learn through our mentors, we learn through our corporate partners, and we believe in a vicious flywheel or cycle of innovation is something that never stops. And if it does stop, I'll use and embrace my prior boss, Jeff Bezos, is that what comes after day one is stasis, and stasis is a long and painful death. So if you're not innovating within your ecosystems and we're not innovating within ours, then ultimately it becomes day two, and day two is certainly not where people want to land. So let's dive in. Big question that gets asked. We've hit COVID situations since January. We're running into the 10th month of this. And are financing and M&A slowing down during the pandemic? And the short answer is no. We're looking at the M&A data. Whilst we did see April have a absolute major flinch, what happened right after that in May, June, and July is we see that these M&A activities are actually back on track. In May, the stock market rebounded, and what we believe is that the seasoned acquirers returned to market. They started looking at the opportunities, and while some of those transactions may not be at the levels of or peaks that they had been in the past, M&A activity is happening. Those that are less savvy in M&A, and that includes entrepreneurs, founders, as well as buyers, companies, they're still sitting this out. And we see a lot of that activity with our corporate partners where they may be able to gain opportunity, but they're not. But long and short of it, we are essentially seeing similar levels of M&A transactions happen. This is obviously data only up to July, but similar levels of M&A happening despite the pandemic. Where it's perhaps more applicable, and that's financing. And when we start to look at the financing situation, I'd actually call it relatively stable, where we're seeing stability and, in fact, many cases increases or increases in the market. July was an outlier month for us. This was a pretty large amount of financing, but there's some reasons or driving factors to that. As we were selecting companies that run through our program in the February-March timeframe that would run and complete in July, we actually had the opportunity to have a better understanding of what was happening in the COVID world, if I can use that phrase. and lean into those opportunities more. The other piece here that's important, if you look at venture capital, ultimately VCs have raised funds and they need to deploy capital. That's the business they're in. They're not in the business of sitting on their capital. They're in the business of deploying their capital. Therefore, they're deploying it where they see the opportunities. And that's an important factor, is that where are they seeing the opportunities? I doubt seriously you would see a travel-related startup being funded today. However, if you looked at fitness or mental health, things like that, the opportunities have actually become even more fluid. And whilst valuations may be lower, we've heard anecdotal data that, anecdotal commentary that valuations are being pushed down because there's less capital flowing. We actually don't have enough data to substantiate that assumption. So it's, round way of saying it, companies that have good business plans, appropriate traction, and are acting in the right verticals are actually having or having the same level, or if not an increased level of funding opportunities in this space. So talk about the sectors at risk. And I'd say the obvious ones: travel. The travel industry is decimated. And what does that mean? It doesn't just mean the airlines or the hotel industry, but everything that feeds into that. ERP systems, booking systems, POSs, anything that is targeted at working in the travel industry is in crisis mode. Fashion, interestingly, has taken a pretty big hit. And I suppose there's some logic to that. And the logic is that aside from the fact I'm here presenting to you today, I put on a button-up shirt, where I'd probably be sitting here in a t-shirt and shorts, which I would prefer. I suppose I could have done that anyway, because at the end of the day, I work in the startup ecosystem. The automotive industry has taken massive hits, and that's actually causing stagnation in innovation. Whereas automotive sales are down in the US between 45 and 65%, depending on whose research you're reading and who's actually wanting to disclose that. Anecdotally, when I talk to my local car dealerships, they would say that they're closer to 80% down, that people are simply not buying new cars. And so that has that has an effect that propagates through the entire industry, is that it just becomes really hard to innovate in a sector that has no capital to deploy and is looking at this crisis as exactly what it is, a crisis. And then property tech, the WeWorks debacle and other areas in prop tech should be fairly obvious. We're simply not going to offices. We're simply not needing the technology, the underlying technology that supports a lot of these property and property venues. And even to that extent, with Techstars, we worked with one of the larger prop tech or property companies in the world, and we are collectively reevaluating what we need to do to innovate in the prop tech space. Now, at risk, yes. Does that mean that these sectors have been completely decimated, or that there are sectors that we shouldn't be considering? I think the answer to that's no. The less obvious ones, which is a bit of a surprise, and this is a startup genome data that they pulled, but you've actually seen, obviously these are the metrics for travel, beauty, automotive, etc. And again, only as it pertains to the startup side of the world, not the full economic picture. But the fact that gaming, social media, blockchain, even ag is taking such big hits is actually pretty interesting, and they're not so obvious. Once again, this doesn't mean that there isn't opportunity within these sectors. However, the opportunities need to be appropriately positioned and servicing what those industries need. So I like the why, and that is that simply revenues fell off a cliff. So this, by the way, this isn't meant to be just the bad news presentation, but there's a lot of bad news, and I think let's punch through the bad news first, and then we'll come to the good in a second. But revenues fell off a cliff. 72% of startups are stating that they had revenue decline. and it's all due to COVID. I can say, looking from the point of the point of view that I have, this number is very tangible. An average decline of 32%. That's a massive hit. And then 40% of all startups saw revenue drops of greater than 40%. And you can, again, this is public data that Startup Genome published. You can go and look at this. But we are seeing very similar trends in our conversations with entrepreneurs, where we're trying to support them and help them, and give them guidance as to how they keep the lights on, how they pivot their businesses. A little bit to celebrate here: 12% are seeing revenue increases. That's a good thing. Of course, there's a massive loss of efficiency. Companies were not prepared to pivot to work from home. They didn't have infrastructure established. They weren't in that place to do the things that they needed to do. And I would argue that costs have not declined enough yet. Whilst we have seen cost savings and very rational approaches or measures from companies, many are still stuck with the burden of lease agreements of offices they can't use or don't want to use any longer. They are seeing incremental costs by trying to provide supplemental support to entrepreneurs working from home or employees working from home. And so there's more cost decline and cost cutting to come. And of course, where you, as entrepreneurs and startups, the real thing you should be doing is laser focusing your activity. So where you may have created a team or a small group of people and spun them up to do a side project, now is the right time to say, let's stop the side project, let's focus on the core and focus on core business and execute against it. So Winston Churchill is someone I've probably quoted about 50,000 times since January, and that is never let a good crisis go to waste. And with that, as I mentioned before, we work with corporate partners, major corporate partners that have had massive revenue hits due to COVID. Some have actually had massive revenue gains, see Amazon. But nevertheless, what we are talking to them about and what they are talking to us about is that this is now the opportunity to reset. This is now the opportunity to take what have been very antiquated approaches or industries that have not been forced to innovate and push them into innovation. The health space is a great example. We work with United Healthcare. Is a Fortune 5 company, one of the largest insurance companies in the world. And we're seeing clear opportunity for them to transform the way insurance providers work with patients. I personally have seen my healthcare providers move to more digital documentation, to better engagement with the patient. In fact, I would argue I get more from those that have embraced it. And I'm, as a consumer, and I'll put myself as the consumer in the healthcare space, I see myself moving away from those doctors that are not willing to actually create a better environment and a safer environment ultimately for their patients. Obviously, mental health has been on the rise. Mental health concerns has been on the rise, and mental health through AI, through apps, and other directions, I've seen more startups start to really pivot to this space and bring really interesting opportunities. There's a company that's been actually around for quite a bit. It's called Yogaya. Yogaya was online yoga, and arguably before their time. It's live. It's not just a live stream where you watch it, but in fact it's a simulcast. So you are broadcasting back to the yoga instructor, and their business exploded. And so starting to look at the notion that 65% of Americans surveyed said they will not return to the gym. They will not renew their gym membership. You have traditional fitness opportunities are in crises, and where that is now a massive rising of the home gym. Not only just in services, but in devices, in hardware, in routines, and then how do you create an infrastructure around that actually services the consumer and they're able to continue. And arguably personal care, supplements, wellness, food, beauty, etc., is definitely on the rise. A massive trend in the United States is in the pets space, where people have leaned into their pets. They've gotten more. There's a puppy shortage in the United States. Please don't go start a puppy mill startup. I would be really discerning. But what that means is there is a growth in people that are taking pets and having pets at home and the care for their pets. Perhaps ties into the mental health part as well. And of course, in fintech, opportunities to innovate an industry that is highly regulated, but we're seeing regulation start to peel away. And then, of course, perhaps the logical one, if you've tracked the Amazon stock price since pre-COVID and post-COVID, the amount, and as well as their most recent quarterly report, the amount of transactions happening in the e-commerce space, if you can embrace it and gain customers' attention, it's particularly important. That is massive opportunities to gain traction. And even within that, traditional retailers, those who have failed to acknowledge that this is an opportunity or a necessity, are changing. Even go further back, if you look at the manufacturing chains versus placing orders of tens to hundreds of thousands of units of something and then bringing them in and hoping they will sell or distribute it, that world is changing. So you're going to see a significant increase in on-demand manufacturing, real-time logistics. And these are all areas that I think every entrepreneur that has insight, intuition, and ability to execute should really be considering, because this is a pivotal opportunity. So my advice, and I must provide the disclaimer, it's free. Take it for its worth. I'm sitting in a venture capitalist seat right now. I have the opportunity of not being an operator. I am a 7-time entrepreneur. I have been in that operator's world, and I know that entrepreneurial journey. I like to summarize it as it is, sorry, apologies for the calendar notifications. I like to summarize it as the entrepreneurial journey starts with impossible, moves to improbable, and then moves to inevitable. What does that mean? Is that everything you look at on the outside is impossible. Everyone says it can't be done. The yoga company I mentioned earlier, I said, that's stupid. Why would anyone want to do online yoga? Famous quote from me. And I passed on an investment there. It's a good friend of mine. So if he happened to have tuned into this, he'll probably be laughing, going, yeah, you were an idiot. And it's okay, admit when you get it wrong. But he's now in the inevitable phase of that journey. And that's a great place to be, because everyone told him it was impossible. As he started getting his first traction, he went to, well, it's probably not going to materialize to something of scale. And now he's looking at a multi-$100 million+ business that delivers yoga worldwide. And that's interesting. As I say to any entrepreneur that I talk to, don't start something you are not passionate about. It doesn't matter about embracing these trends. If you do not believe in it, it will never work. And then live in the future. The way we are not going back to December 2019. If anyone believes that to be true, I challenge them to a heated debate in public forum, because it's just not going to happen. We have learned more, and we have embraced opportunity to change things. I can tell you personally, as you see, I'm sitting in my home office, like many of you. I gave up my office. I'm not going back. Didn't spend enough time there anyway. And whilst I miss colleagues, I miss engagement, I'm actually able to do that in different ways. So we are going to move to a different new normal, a new norm. And that's the things that really should be considered. On the investment front, I think it's investment will come. We are and it's about robust businesses. businesses that can demonstrate metrics, less about the promise. And so in the United States, I often would categorize investors are, US investors invest in ideas, in vision, in stories. And I often would categorize the European investor as someone who invests in business. I think we will come back to more of a grounding that we are investing in businesses. Techstars doesn't change our approach at all. We're still investing in teams. If you look in everything we publicize, we have 5 investment criteria: team, traction, product market fit, or product market fit and traction. Interchangeable in that. Why do we do that? Because great teams will always succeed, and our metrics demonstrate that, regardless of the product. And so it's a critical way to think about you as entrepreneurs and how the investor community is looking at you. The opportunity now is the pivot to remote first. I'm still talking to entrepreneurs that are going, I'm based in Singapore. I really think my team should be in Singapore, but a software engineer here costs me 5 times that of a software engineer in Medellin. And there's the same skill set. And so my mental model has been for years that if you build the remote ecosystem in the appropriate way, you make your employees part of your team, it really doesn't matter where they are. Techstars, we demonstrate that in our own actions. We have employees present in 22 countries in the world of our just under 300 employees worldwide. And they are all part of one big team. And we organize ourselves structurally to deliver a remote first approach. And I believe that will only grow and expand. And the dynamics of the world are what you're actually trying to sell into, not the dynamics of your local hometown. And then finally, we are in this state of frugality, meaning every dollar spent, every euro spent, every line item in your budget starts to count. And so be smart about those, make frugal decisions, be absolutely clear on goals and outcomes, measure them diligently. And if you're not going in the right direction, that's okay, stop. Pivot, start something new, but be very deliberate about your actions. That's what makes or breaks many teams. And then operational excellence is something that I've talked about in many forums, and something that I am a massive champion of. And that's about establishing protocols, process, scale at the to scale at the earliest possible start of your business. Going back and fixing tribal knowledge, going back and fixing process is really hard. And it's almost like stopping and starting again. And so on that note, I will, I'll leave you with that. I'm more than happy to talk with anyone directly. My email is here. We live at Techstars a give first model. It means we give first with no expectation of in return. So if I can provide you, or if I can connect you with someone that's going to help benefit you navigate these very new and interesting times, I'm more than happy to do so. Thank you.
Thank you so much, Ivan. We love the give first mindset you guys have at Techstars, and it's part of what makes us do what we do at Wintrip too. So we just have time for one super quick question, and that is, how attractive do you think the LATAM market, the Latin American market, is for major US-based accelerators and VCs in general?
So I believe that that LATAM as a complete ecosystem is quite diverse. So it's hard to answer that question just specific to the larger market. I believe what I have personally seen and am prepared to make bets on are locations like Colombia that have shown demonstrative evidence of others wanting to be in that market and invest. I've seen Mexico City rise. And by the way, I actually prioritize those as I set them. Chile has had a thriving ecosystem for some time. We've had a number of founders come through Chile, and then Ecuador as well. We've had the opportunity of some incredible companies in Ecuador come to Techstars, but all white, small. So I think overall the opportunity is ripe. This is actually, from a Techstars point of view, it is with the right partnerships, the right alignment, and the right entrepreneurial communities, we think it's a great market to be going into.
Fantastic, Ivan. Thank you so much for being here with us today, for taking a jump to South America. And we really, really loved to have you here.
Thank you. I noticed the chat is sort of populated pretty heavily. If
Yeah.
anyone there wants to send me those questions, I'll happily answer them. I believe that you are going to be moving on here, so.
Yeah, thanks so much for offering that and for the generosity with your time. And yeah, if you want, we can pack all of the questions and figure out something we can do with you coming forward.
Happy to do so. Thanks,
Thank
everyone.
you, Ivan.
Take care.